Japan is on the verge of a fire sale of hundreds of billions of U.S. debt that could crash treasury markets already teetering on the edge. Yet another exciting day for de-dollarization as Japan's collapse sends them scrounging the couch cushions for dollars to pawn. The news comes from the Wall Street Journal, who writes that the state-owned Government Pension Investment Fund, which holds Social Security reserves of nearly every Japanese worker, is poised to sell down its $800 billion stack of dollar assets and direct the money to domestic bonds and equities, perhaps in the hopes of propping up Japan's asset markets long enough to limp to the next crisis. The numbers are big because Japan actually has a Social Security lockbox, unlike in the U.S., where Congress has pissed away every last cent Social Security has ever taken in, replaced by IOUs. Out of that $1.5 trillion in Japan's lockbox, GPIF owns nearly $400 billion in U.S. Treasuries and another $400 billion in overseas equities, stocks, overwhelmingly parked in the S&P 500. So that's $800 billion of dollar-denominated assets potentially on the chopping block. More important, the government pension influences all the other pensions in Japan since it's a quasi-official seal of approval. Those other pensions manage another $1.5 trillion in corporate pensions alone, and a similar allocation would imply yet another $800 billion in U.S. assets, perhaps on the chopping block. The party for de-dollarization does not stop at Japan's pensions. Just 2 weeks ago, Japan's number 5 bank, Norin Chiyokin, announced that they'll be selling up to $63 billion in treasuries to plug holes in their balance sheet from unhedged sovereign bond investments. Those are the same investments that crashed a bunch of U.S. banks last year. The even larger Japan Post Bank could face even bigger dollar sell-offs given its get-rich-or-die-trying portfolio, including $200 billion in mainly U.S. bonds and $350 billion in, quote, investment trusts that, once again, are predominantly in U.S. bonds and private equity. Considering that major banks in Japan also tend to mimic each other, there are probably more dollar fire sales on the way. So what's next? Brought to you by Unchained.com. Japan at this point is selling off the furniture to pay the rent. The government is essentially out of ideas, having plowed Keynesian stimulus to its logical conclusion and achieved nothing but a debt ratio of 264%, which is the highest of any major country. In U.S. terms, it would be about $70 trillion. The one thing Tokyo has not tried, of course, is radically shrinking the government, slashing government spending, slashing small business taxes, regulatory mandates, getting the central bank out of economic micromanagement. As for the dollar, if Japan is about to flip to mass seller, that knocks out the single biggest overseas holder of U.S. debt, at a time when the number 2 holder, China, is already selling dollars hand over fist, down by about a third in the past 5 years. And what if there's not enough buyers for U.S. debt? Easy. Prices crash and interest rates soar. We would be back to crashing banks here in America, with Washington's debt service driving towards $2 trillion per year in interest alone. Toss in a coming recession, the open border, and funding all the wars Biden's handlers can dream up, and we could be in for a very bumpy ride. Okay, we'll be watching. See you next time.